Hi, I'm Vanessa from Premier Tax Solutions, and as part of our Accounting Basics series, we're going to cover business structures today. The main three business structures are sole trader, limited company and partnership. So I'm going to go into detail on those, but there are some other ones that are kind of like variations of those, and they're going to pop up here. So that's something else that you could choose from. So you've decided you're going to run your own business, but you don't know where to start. A common misconception that we hear about all the time is people think that to have a business, you need to register a company with Companies House, and that isn't the case. We see this happening a lot, unfortunately, so it's best to get some professional advice, and that doesn't mean your mates down the pub. A limited company is a separate legal entity from its directors and shareholders, and it should have a bank account in its own name. Limited companies have something called limited liability, which some people may find attractive. In a nutshell, it means that the shareholders are only liable for the debt to the limited company up to the value of the shares. So before you go and issue £1,001 shares, you might want to think about that. Typically, business owners receive payment from the company in the form of payroll and dividends. Dividends that are declared have to come from profits. The company pays corporation tax on its profits, and then the directors and shareholders pay personal tax on any income from the limited company. A sole trade is a business run as an individual. It's not a separate legal entity like a company is. As a sole trader, you pay tax on the profits of the business, as they're all yours to keep. It also means that you're liable for any business debts. So if creditors can't be paid, potentially assets such as your house and your car could be put at risk. As a sole trader, you can still be VAT registered and you can still employ staff and pay them through a payroll. These are two misconceptions that we hear a lot. If there are two or more of you in business, then you might want to consider a partnership. It's very similar to a sole trade in terms of paying tax on profits personally. The partners would also be personally liable for the debts of the business, and because there's a few people involved, we'd always advise that you have a partnership agreement and get legal advice to do that. So here's some of the things to consider when choosing a business structure. Is it just you going into business? If so, you could be a sole trader or a limited company. If there's more than just you, then maybe look at a partnership or a limited company. Think about the associated costs. Typically, a limited company has a lot higher accountancy fees. There's also fees to Companies House and a lot more legislation that you've got to deal with. Did you want limited liability status? So, for example, if you had a claim and the insurance didn't pay out, that could potentially put your house and car, boat, anything else that you might have at risk if you're a sole trader. Whereas if you're a limited company, you've got the protection of the limited liability status. Are you looking to attract investors? As with a limited company, it's a separate legal entity, so it could be a lot easier. There are tax advantages for investors, so they may find your company more attractive to invest in. Do you want to protect your name? A lot of people register a company with Companies House to keep the name, but you will have to file dormant accounts and do things like a confirmation statement with Companies House each year. The level of profits is something else to take into consideration, and offsetting that against the accountancy fees involved, which are a lot higher with a limited company. Limited companies can provide more options for tax planning. So if you'd like any advice on business structures, you're not quite sure where to start, then get in touch. Thanks for watching.